the dollar Swiss. We are on levels in dollar CAD. We are on levels in a lot of dollars. But yeah, the dollar yen. It seems people perhaps prefer to trade crosses than the dollar yen. Reluctant to buy it higher. I don't know. I'm just like tiny to keep an interest in the dollar yen, but no, if it goes back below 148, 2025, I'll be gone. Yeah, the rest of the dollars are always showing a little bit of reluctance. Doesn't seem like day traders have the power to enough firepower to take it through levels, because we are seeing like
Good point.
shying off a little bit. We're going to need some, well, the dollar bulls are going to need some help from model phones or perhaps real money, but they seem relatively quiet when I look at what's happening around the globe. But then,
You know what? You know what's really been stubborn?
mm,
This. With the dollar rally we've
well,
had and with yields, I mean, you know, I keep waiting for some type of capitulation move, at least under 2000, maybe towards, you know, the convergence of this line and moving averages. And it's so stiff. I mean,
yeah, we're
compared
going
to
to need something to drive it onwards.
maybe a ceasefire, which I think blew up again. Maybe
Perhaps,
people would sell it on peace and that
yeah.
would be a buy.
Mm.
Um,
But I
Go
think
ahead.
the 20s, those 420s on the tens, they can be important enough. It's also the case that stocks holding up are preventing the dollar from really advancing too much. And if you look at the
Good point.
differentials, they're very, very stable, very stable. I showed them again on the flow show. You do the move on data, and then it seems the market needs more than just data to buy dollars or so. The market still
What's a
seems not.
DSI on S&Ps? Anyone know? I
Sorry?
I what's the DSI on S&Ps?
Let me go look
80?
in our newsroom and I'll tell you right now, Dale.
Thank you, buddy.
S&P DSI is 77.
Okay. Is that you know, has it been over 80 in the last week or so? Coming down
It
a
No,
was
little?
85 early. I want to say it was 85,
last
like
week.
83 actually last week. Yeah.
Okay. All right. WTI, you know, just a look at some of the outside markets. I was disappointed with the action in the peso yesterday, but it could still hold here without making a new low. Still could be a right shoulder. Here's the left shoulder. You don't really don't know if you're wrong unless it takes out 1680. Do you feel the same way, Blake?
Politics.
I'm still long and I don't
Yeah.
really worry about it. It's holding up really well based on where stocks are at. I mean, we're trading at
Okay.
all-time highs and
That's a good
we
point.
sustain a breakout. So, you have to imagine there's going to be flows buying Mexican pesos early and then,
Yeah.
later in the day it seems like it just gets swooped right back up again. So,
Yeah.
I don't mind holding it. It is just
Okay.
I have such a small position. It's more of a tracker for
Got you.
me,
Yeah.
waiting for the clues to be full size, and that's just not quite yet. We're not quite there yet.
Okay, buddy. I appreciate that. And God, what a great team, huh? New
Well,
people. Have
Mexican
you?
peso is trading with politics right now
Okay.
because the Mexican peso strengthened on the back of this GOP trying to kill the border Ukraine package. It itself demanded. So if that package would come through, they would give a lot of power to close borders and stuff for to keep immigrants out, and it seems they retracted it. So I guess that's a part of the Mexican peso strength today.
Okay.
It's starting to be a real political currency. This one.
Yeah. I think President Biden has executive authority to do it. President Trump did. Uh, so we'll see if they can't get something through. Congress, maybe the market is, selling off USD MEX, but it could be an executive order that would take it through 1940. I just wanted to show this gold silver ratio chart. And if you're a precious metal trader, just draw this line, this horizontal line in there, because it's in a very important pivot. It was on the verge of negating the breakout, and it didn't. Okay. So really, until this starts trading under 87.60, I'd still avoid the long side of silver. This is still going to be important if silver is going to lead, and this is showing the underperformance of silver for a while now. So you need some type of top here. Just a pretty important chart to keep an eye on if you like the precious metals. Canada, guys, what do you think?
I think it's right up against really key resistance. We do have Macklem speaking today. I don't know if we should expect a whole lot out of him, but maybe he says something that gives it a little bit of a oomph. But that's kind of the problem this week. I say problem. There's going to be now that we're past a lot of the central bank meetings. You got we have three key Fed speakers speaking today. So we're gonna have to be looking out for headlines. We got Bank of Canada's Macklem speaking today. That's a big one. But I don't know. I like the dollar CAD. I still think it's a bull flag pattern. So all you got to do is break above this 135.50 and it's off to the races. We should probably trade up towards 137 if it can break out. It's interesting. You pointed out earlier, Dale, that the DSI for the dollar index is at 85. Now, until we get to 90 or plus, I don't think much about it. But the one thing I do want to point out is I was looking at some retail positioning this morning, and everybody, and then Benedict, who's in our chat room, he posted a real big view of like everybody like that he tracks, and which is like 7 different brokers. It just shows that everybody's trying to buy euros down here. Everybody's trying to buy cable.
Really?
Everybody's trying to short dollar yen. Everybody, retail's really trying to fade this move.
Interesting.
Right now. So
so they have to get, give them a 1-day victory and then take them out, and then maybe it's a better buy.
1 day, they might even get like 2-hour victory and then, roll over again.
Go ahead.
I was just going to say, you look at the euro broke down yesterday. Sterling broke down yesterday. Good point. They're stabilizing here at current levels, but they aren't reversing. They're just consolidating despite this rally that you're seeing in risk. And this is the divergence you're seeing. And it came in, I think you pointed this out in the chat room, which
So there's just a headline popped up that China and US held an economic working group meeting yesterday and ongoing today. Just a headline for that. If just keep an eye on that one.
Well, and that's on the heels of China being up almost 4%. I mean, Xi's doing whatever he can do to strengthen Chinese equities at this point. So that's interesting.
As far as the dollar is concerned, guys, so that you'll know it's starting to do something wrong under 380. It could test 380 and then have another run. I wouldn't want to see it back under 380. That line right there.
Well, one of the things, and Tony said, I feel bad for anyone who went into China stocks. I mean, Chinese stocks are, they're recovering right now, but we're seeing, if China recovers a little bit, you might see money move out of other markets that have been really benefiting from, this China sell-off. You get a lot of reversals, and you might get a lot of reversals in Japan and maybe even some here in the US as money, shifts around a little bit. But overall, looking at like the dollar, going back to the dollar, and you're covering it right now, Dale. And I'll pull up the charts if you want.
Okay, sure. Go ahead.
Looking at the dollar, overall it's holding up very well despite this mega rally that we're seeing in stocks. And that's the thing I think we need to be cognizant of, is it just you're not seeing much of a pullback yet. And will we get one? Yeah, I think so. I'm in the camp that the dollar will start to show some weakness. But I don't know if that's Euro 105 or Euro, parity. I'm not really too sure with that. But I do have to point out that, yeah, these breakdowns, like here's sterling breakdown, here's the Euro breakdown. They're finding some buyers ahead of some support here, but overall holding up pretty well. Now we got some comments from the Bank of England. Who's this BOE member that I'm not familiar with, Ryan, this morning?
Dingra?
Yes. What was the comments this morning that came across some of the wires this morning?
She was just justifying the reason why she moved towards. She was the one who voted for a cut last week, so she was just justifying that, saying you shouldn't let the economy go too far before thinking about cutting. Just she's the big dove over there, so none of her comments are a surprise.
Okay, all right.
Nothing to the pound.
What do you think? I mean, about going to looking at all these central banks, and this is going to be a race, obviously, to who cuts rates first, whether it's, the US, the Federal Reserve, the ECB, or Bank of England, and obviously we just had the RBA last night, and which was, pretty hawkish from what I read last night and then today. But overall, which central bank do you think is gonna? Where would you put your money on seeing a cut first?
As I said, I think they'll all go around about the same time.
So you think it's going to be more of a coordinated effort with all central banks?
Yeah, they like to coordinate at times, but there are nuances that the Fed could go first. As I've been saying, they've got a higher level of rates, so they've got more ground to cover to get down to neutral. The ECB have got less ground to cover. The BOE, they're going to be probably could be one of the last ones, because as we saw with them taking rates higher than everyone expected, except for me, they're going to be more sticky in inflation and everything on the way down. So they might be one of the last to cut unless obviously the economy falls off a cliff. So yeah, on balance, I think the ECB and the Fed will roughly go at the same time if the data continues as is. The Fed might just go that couple of weeks earlier.
All right. Yeah. Okay. All right. Well, Dale, you were just talking about like the dollar index. We've had this kind of like we call it a big resistance zone in here that's been we've been looking at, that we're approaching the 618 retracement. So you can see how we're starting. Yeah, we're starting to struggle. We're finding some resistance. Obviously, I still think that there's further to go in the dollar, but you were targeting 105, so we're not too far away from there. That's the inverted head and shoulder pattern. Completion level would be 105. So we're getting there, getting close. And I think a lot of people are licking their chops waiting to be on the short side of the dollar, but I'm not convinced that the dollar's ready to reverse yet. K-Man, I want to talk about the dollar yen, because the dollar yen, as you can see, we're struggling right up against resistance. Bull flag pattern. I have to point out that pullbacks have been very, very shallow. If you look at the dollar yen, that pullback can't even get back to a 38% retracement. So most of you that listen here every day for the last 7 years, and those of you that have been listening to me for a couple of decades now, know that when pullbacks are shallow like this, it's very hard for something to reverse trend. So we've got this very shallow pullback right up against our highs. Do we break higher in the dollar yen? Do we try to challenge 150? What say you?
I think the yen crosses are probably heavy enough right now for the dollar yen to slow down. Let's put it that way. I think we are going to see, because I also think the dollar isn't done yet. I think we are going to see at least high 149s. That's my view. But the crosses are putting a lid on it right now. And it's a bit same as in all those dollars, right? You got the dollar Swiss on those levels. You got the dollar yen on those levels. The euro, cable, Aussie, you name it. It's they're all struggling with their levels. We are going to need something to take it through. But if it goes, or when if and when it goes through, then it's probably going to do that extra spike again. But we need to break above those 148, 80, 90s.
Yeah, I have this alarm set up here to really start looking to well, it says short it, but that's what my alarm says. But I the 78% retracement at 149.60 is kind of I want to see the price action around there. It's such a big number, and I think people want to anticipate, myself included, wants to anticipate, some sort of action from the Bank of Japan soon. I'd like to actually see more of just a lower high created here in the dollar yen, but you can see a lot of critical resistance up here. I don't know if you can really stand in the way just yet. But go ahead.
Just to reply to Patrick, do they intervene? No. But what we can see at times in when you do those rallies and then it starts to cap is perhaps an exporter sitting on the offer. That's a possibility, and why we are banging our head against that 148.80. If they are leaving offers, then it's probably going to be capped at least for a while. But there is absolutely zero intervention right now.
Yeah. Okay. Yeah, that and they're extremely quiet, which is concerning a little bit. So let's talk about what's happening in the equity markets, and let's go over to the S&P. Dale, stocks are holding. I think we're up against channel resistance. This has been a channel that, been following. No reason to be a seller, because you can see last week the dip right to the big, breakout point held within 10 points, and we rallied. No reason to be on the short side, but we are stalling ahead of 5,000. I mean, 5,000 is a big number any which way you slice it in the SPOOs. The E-mini futures are getting close. The CFDs are all getting close. Cash market close as well. What do you think about the S&P up here? Are you a buyer? Do you think we go higher, or do you start fading stocks up here, Dale?
I think you fade it, start fading around the big round number.
Around the 5,000 level.
Yeah.
Okay. I kind of see, I mean, I understand what you're saying. I kind of want the proof.
Could be from here. Maybe I'm not the only one waiting for 5,000 to sell.
Oh, I think everybody is. Yeah, I think everybody's probably going to have their orders stacked up around these highs.
It either doesn't get there or blows right through it if everyone's waiting.
That's the thing. That's a scary thing, is we could get into that blow off top territory if we really start breaking out. That's the one thing that I have to say, that all of these macro analysts about no recession.
Tony's asking why, because so far the market's held up with the yields. But if my targets come through in the 10-year, like 440, and TLT back down towards 90, I think the market will correct on that.
Yeah, and I don't disagree with you, Dale, as far as yields go. And we have a 3-year auction today. We have a 10-year tomorrow and a 30-year on Thursday. So a lot of supply hitting the market. And this could really, I think we got the double bottom, failed flag pattern. This could really rip us up towards this 450. And markets will not like that. Markets will.
I mean, the one that's held up the best the last 3 days, of course, is our equities. But there are a few cracks. Like
Intel. There are some cracks. I still want to see
NVIDIA. It's still a parabolic move, almost 700.
It's crazy. NVIDIA. Look at this thing. What's that?
Why wouldn't markets like it if yields ripped up?
I think it continues to tighten monetary policy. I think it shows that the Fed's going to keep rates higher for longer. I think the market would be cluing us in for that.
But wouldn't they do that? Wouldn't they do that if the economy is doing well? I mean, if the economy is doing well, it brings those pressures with it.
That's a good point. That's a valid argument.
If you're an investor, where are you going to stick your money? In an economy that's going at 3% plus a year, or somewhere like Europe that's at 0 point whatever? a year. You know, there may be a time where if the US keeps widening the gap economically, investors are going to go with right, who's the best country? That's where we're going to stick our money for the best returns. And then you probably see a rotation out of Europe into the US.
Yeah, I mean, it's still the least dirty shirt, and that's where the money is, right? That's where the money's going. That's where it's at, and that's where it continues to go. And Dale, you have an interesting guest coming up, Bob. What's his last name? Elliott, that's right, Bob Elliott. He does a lot of the macro shows on Real Vision and stuff. You're gonna have a really good interview with him. I think you're gonna be able to probe him about how he feels about equities up at these levels. But I don't see any reason to really fade him. And I hear what you're saying, Ryan. I just think that yields. I think that's going to be like the kind of the gets the radar going. Everybody starts to get a little cautious if yields break out. But I do understand your argument. I completely understand.
I don't dismiss. Yeah, I don't dismiss the market having that reaction, because that's the reaction it always has. But this is a different situation now. We've got to learn to change with the conditions.
Sure. Hey, let's real quick. China. Look at these. Look at this. You know, Chinese, the the China 50 up over 3% last night. Hang Seng up 4% last night. Is this it? Is this the turning point for China? What do you think, K-Man?
Well, we've been talking about it, and I've showed it on the in the chat room as well. We've been talking about it in the flow room. This is a time where I think we should pay attention to what's happening in China, and because they seem to be really wanting to do something about it. Now, the question remains, will the investors buy it? If the investors start to buy it, then I think it's probably time to think about Chinese stuff again. If in turn they are throwing all this money at it and telling their government based funds to buy ETFs and what else not, and the market is still not buying it, then I guess there may be a deeper problem for the CNH coming. And I have really literally ignored CNH for quite a while, and I'm just putting it now back onto my radar and see what may happen. And then the one you're showing is probably going to follow in the distance as well, be it versus dollar or in the crosses. We will see. But that is something now. It's just going back onto my radar.
Got it. Okay. Well, I'm gonna. We just have a minute before Dale's going to take over. No real big headline or news today. We've got obviously Fed speakers up the wazoo. Let me see here. Just so you guys know, we got Mester, Kashikari, Collins, Harker. So 4 Fed governors going to be speaking. We got Macklem speaking a little bit later. So we'll be, looking for the headlines coming from them. Now that the quiet period's over, we get to hear from all these Fed governors, which is great. Not really. That was sarcasm, by the way. What you'll notice is the Aussies kind of stalled at previous support, previous, key level pivot. We couldn't get back above there last night, despite the hawkish RBA. Want to watch this Aussie because, you got Chinese markets that were up substantially. Aussie doesn't give a shit. Doesn't give
I'm a
two
buyer
shits,
at 64 at 78.6 back.
Yeah, I think
for
the
that long
64-cent level is entirely possible here. So
and then look left. If you go further back, like a weekly, you could imagine. Okay, there you go. That this could be a right shoulder. Look at the left in May or June, right around the 64 level. So you have pretty good symmetry if we break down to 60, if we sell off to 64. And
yeah,
then
I should find some buyers back there.
Yeah.
But I'm just surprised that following the RBA, we are not higher.
And China.
And China. And I think a lot of bulls out there are probably thinking the same thing. Hey, listen, guys, if you don't listen to Ryan and K-Man every day, you should. They are on the Flow Show while Dale and I are sleeping, and a lot of you that live in North America are sleeping. For you European, Asian traders, make sure you listen to the Flow Show. How many hours ago was that, Ryan?
Just
3
finished
hours.
before face.
You just finished before face.
Yeah, just literally 2 minutes. No, I'm joking.
Okay. All right. Well, we'll make sure that you guys are listening in. If you can, listen in the Flow Show. It is a free show every day. And then also make sure you check out the ForexAnalytix community. $1 for 10 days. Try it out. Download the mobile app. Here's the platform with live squawk and risk management tools and data flash and most importantly, you can be inside of the ForexAnalytix community where we're chatting about markets and things that are moving all day long. So
let me in, man.
Dale, you can always go find your DSI in the news and research area.
I want to be inside, man. I want to be inside. All right.
All right. Well, hey, have a great interview with Bob and you guys. Ryan, K-Man, thanks for being here today. Dale, thanks for guiding us. I'll see you guys a little bit later.
What a great job. And really, guys, like Blake says, if you get up early and you want to be in the know, get into the Flow Show and check out these guys. I know what they've added to F.A.C.E with them being on here. A lot of actionable ideas, some good market minds in here. And here's another good market mind, Bob Elliott.
Oh, too kind.
Hey, Bob. No, just
Dale, good morning. Good to see you.
Extremely accurate. Good to see you too, Bob. So, I've been on your stream, and why don't we talk about China? You've been talking about China in your stream, and do you think that they're going to be able to pull this off? The charts don't look bad after today's action. That there's a possible low coming in. Should people be skeptical, or should they be probing China at these levels? Do you think we have a turn?
Yeah. Well, I think my view on this sort of stuff comes as a longtime FX trader, where the one thing you learn as an FX trader is you always want to go against the central bank when they're intervening in the exchange rate, because what they're doing is they're pushing against the underlying sort of fundamental private sector forces. And I think seeing direct intervention like this in an asset market is pretty similar to that in terms of the framework that you want to use. Like, the reason why they're buying so much is because, well, they have to, because no one wants to, no one else wants to buy, right? Everyone else is selling. And so it's, of course, just in the same way the MOF in Japan can make the yen pop, 5 cents, and and then that's annoying if you're on the other side of it.
And like they're big the Chinese, they were big equity buyers. So I mean, when the Nikkei was a lot lower, so if you were fading the BOJ's ownership of equities, it wasn't.
Well, I would just say, but what they were doing there was monetary policy. So if you change, if the central banks change the fundamental policy choice, then that's a very different story than if what they're doing is just trying to intervene in an asset market. It's just the same way as, you want to fade a central bank that's intervening in the currency markets, but you want to reflect, the strengthening of currency. Let's just say if they hiked interest rates 500 basis points, or they hike interest rates relative to expectations. And so I understand that feels like a little bit of a nuance, but one changes the fundamental dynamics, and one is just simply affecting the asset market at that time. Fade the asset market influence and run with the fundamental policy choice changes.
Okay. All right. So, I also saw a headline, and you were right about it. I think you were on Real Vision, and you said the title of the show was, "Is it time to fade bonds?" And, I don't know if it was it was the first wave, and then we had a pretty nice rally, Bob. In fact, I want to get your view on it. I'll pull up TLT as a proxy, because I think really this is a big story that, actually Jerome Powell has to go on 60 Minutes for the market to believe him, because the market faded him at the last meeting. Yields dropped even after he took March off the table, right? And then we had the employment report, and that helped put in a lower high in TLT up here. See that?
Yep.
All right, so I've been talking about that this is corrective, that we could get something like this from here, that would give us 90, maybe
Yep.
88 if it's extreme. So are our bonds trading risk on, risk off, Bob? And have they their nature has changed? Is this risk off? What's going on in bonds right now?
I mean, I think they're trading on economic conditions, and actually, I think that that move that was around the employment report is a good indication of where they are. And part of the confusing thing about this is the move that moved down to 93, give or take. The last sort of push in it, was really around people positioning for what was expected to be higher duration issuance in the QRA, and we kind of got like a confusing mix of things. Like we had a banking crisis, which of course was bullshit.
You mean the New York bank?
Yeah, which is like one idiosyncratic bank. It's not, it's not a broad-based thing. Like on the day that the people who positioned short bonds into the QRA and the Fed meeting were right in terms of what transpired. It's just that they got hit by this other effect, which roiled the markets. And so anyway, we haven't even reversed fully that effect.
The art is never the if, it's the when, Bob.
It is. It's like talk about keeping you humble,
Yeah. So do you think there's more left in yields going higher on the long end?
It sure looks like it. I mean, there's still 125-ish basis points of cuts priced into 24. And if you believe Scott Pelley's voiceover, they're not going to start cutting until the second half of the year. And they're probably not going to cut right on the election day, whatever. They're going to be sensitive around that time frame. So
they've Jerome said they've never been political and they never will be. So
I mean, I agree that they are not making decisions based upon, it's not like it's not like Biden calls up Jerome Powell and says cut the fucking interest rate, like that's not how it works.
But then isn't that what President Trump did? Didn't he call him? He was trying to leverage him and fire him.
He told him to buzz off, which I think, the more it's like, the more you tell your kid to not do something, the more they're likely to do it,
Oh, well, I must still be an adolescent. I respond the same way, Bob.
There you go. See, I think we all have that streak, Dale.
Yeah. So, I just want to push back a little bit on that New York bank being a non-issue, because if I look at a weekly of the regionals, and I know everyone's very bullish, the Russell, I know some people talking about it doubling, etc. But look at this weekly. So here was SVB down here.
Yep.
And they had, this is when they put the emergency facility in. And, if the emergency's over, why do they still have that facility? And then I don't know if you noticed it, but I had a guest, Tom Malinan, who showed me a chart that for a while it was flatlining, but then all of a sudden borrowing from that facility started to head higher again. So it may still be an emergency, or why haven't they ended the program? And, this does not look that bullish unless we get over 52. This could put a little damper on the party. Doesn't it look like a bear market rally to you in the regional banks? Money centers doing better?
Yeah, well, I think we got most of the, when we moved into the 52 on this, it like basically the post SVB recognition and rebound was kind of done, and it's one of those things where I this is probably in the world of picking up nickels or whatever, like probably 50 is the fair value on across the regionals right now, and what's it at 47 and was up at 52.
So it's fair value.
This is probably not a place to spend a lot of mental energy, would be my guess. Like, it's not, the fundamentals don't align with going down meaningfully further, and the reason why that is, a big part of that pickup in borrowing was because there was an arbitrage that the Fed squashed, associated with being able to borrow at a rate that was lower than the deposit rate at the Fed. So you could borrow the rate. You could borrow at the 1-year rate, which obviously, because there's cuts priced in, is lower than the spot deposit rate. And so you could collect, 50 or 50 or so, or 75 basis points on that trade, essentially risk free, because you could just pay back the loan whenever you wanted. And so, and you saw the second that ARB opened up is when this borrowing reaccelerated. The real thing to look at in the regional banks is the deposit dynamics, and just seeing you see there is that deposits have been flat for, really have been flat for like 6 months.
All right, so no flight.
Nothing's going on. It's not very interesting on that dimension.
Maybe since rates peaked, people don't care as much. Could that be part of it?
I have spent more time than most in the small bank world. The reality is that the deposits in small banks are sticky because they're not investment assets. They're transactional accounts, mostly held by businesses and households, paying their bills. Like, it's not, and they're mostly most of the reason why they have their deposits there is because that's who gave them the loan, the bank on the street, down the street for them on Main Street. And so the reality is just like a lot less interesting than what the financial press would tell you. Like, deposits went out, a few percent of deposits went out, but the big picture is it's not very interesting. And, mostly these banks are just kind of getting squeezed to some extent because, rates are a little higher and they can't fully pass that on to borrowers, which is why a reset of the prices is fine, like down to 50 from where we were in the sort of low 60s makes sense. But I don't think this is not the place to spend a lot of money.
All right. Okay. So after we wasted 5 minutes, but I won't waste any.
Well, part of being a good trader is knowing where you should, put your mental energy and where you shouldn't. And part of that is actually the most important question is, should you focus your attention meaningfully to trade this market? Like that is actually the most important question.
Should I be looking to fade dollar? I was looking for 105 for the last month. We're starting to get near those levels. Can you give me a fundamental narrative on why this dollar rally can end and reverse? Can you come up with anything on that?
Well, I think it comes, the U.S. economy is a lot. What's that?
Yields?
Yeah, I think the U.S. economy is just a lot stronger than the rest of the world. Okay. And so that should favor the dollar relative to other currencies from a monetary policy perspective, and from the continued inflow of capital and our, somewhat higher yields are we're actually getting a lot of bond demand from foreigners, which on the margin is dollar supportive as well. So, I think the basic structure of the dollar is tilted on the upside. Which is kind of what you see here, once we had the reset of monetary policy expectations, basically just been moving higher, right? Meandering higher.
Yeah, well, we were stuck in a range until the employment report. And we had a breakout here. But it was a nice advance from down here in December. Everyone was bearish a dollar down here. Everyone was bullish a dollar up here. I was just wondering if there was any kind of fundamental narrative. And sometimes they don't really appear until a move has been underway for a while. Then there's an explanation. It's like traders live in the future, and reporters report what's happening today. Right.
I think the next catalyst here is European inflation numbers coming in soft in the next couple months. That's really, which will give the ECB some room to actually cut.
Okay. And that should be bullish a dollar still.
Bullish a dollar. Sorry. Yeah. That's
okay.
That's
so you can't come up with a reason to be looking for a dollar top at this time. There's nothing.
I don't see it. And also, if you zoom out, the valuation here, this is not, this is where I was thinking. If you go, I don't know.
Here's a weekly.
Give me a couple years.
There you go.
There you go. We still are not so toppy in the value from a valuation perspective here at all.
Okay.
So,
all right. Very important level it held down here, the SPAR level.
Yeah,
that's going to be important. So, why don't we talk about something that's been pretty stubborn that I know you believe in, that it's in your ETF?
Oh, gold.
Most likely. Yeah. Don't you think it's been stubborn, Bob, with the strength in the dollar and what's happened with the yields? I mean, it hasn't rallied, but it really hasn't given up the ghost yet either.
Well, I think that's the thing is like gold. I often think about gold, trading gold relative to looking at relative to yields and the dollar to kind of like try and take out some of these sort of other factors that drive it. And yeah, certainly if you look since the start of the year, bond yields are up and the dollar's up and gold's flat. That's, pretty good, all things considered.
It really is. I know it's disappointed people that are buying it on geo stuff. But it has held up. I'm still going to try and stay patient, look for at least one more flush under 2000.
We could get, my guess is like more likely than not, the strength in the U.S. economy and the yield, getting a yield back up is going to put a hamper on here. We were down in the mid 1900s, I want to say, I guess, mid low 1900s a couple months ago. Yeah. And that marked a nice floor and it was able to bounce from there. And so that's my sense is that there probably is a better buying opportunity here. But overall it's showing pretty good fun, like sort of strength on and stability given the macro conditions. And so,
compared to silver, especially the gold silver ratio has been very strong to the upside, which favors gold over silver. Do you pay attention to silver at all? Someone said it's losing its precious metal status and just becoming like nickel.
I don't keep track of silver. It's hard enough for me to understand gold. I can barely get this.
Well, you come from the FX world. What do you think about the biggest political hot potato right now in the U.S. being the border? Do you think there's some way to play U.S. dollar MEX? I've been trying the long side here. Because if we get through some levels like 1740, it's going to look good. And when you look at the weekly, which, the telescope, these are higher lows than from earlier. So could a border shutdown, does Biden have executive powers to shut it down himself, the border?
I have no idea from a politics standpoint. I think and even if he could shut it down, it's a question of whether that does anything. People still
everyone's pretty bullish Mexico.
I hear you, and I think in the currency space, the thing that just sort of surprises me is vols are so low. I mean, part of that is because just look at this chart, like the realized vol here is like incredibly low, and so particularly downside protection in these names, given how cheap the vol is being priced here and also in China. I don't know if you looked at CNH vol is like at multi-year lows coming into, an election environment. It just seems surprised. I think that's because, vol gets priced in, in context of the recent market action, but that seems like a pretty cheap, bet that's out there. I was looking at like
17
CNH calls, that are somewhat out of the money, like in the 7.5 or 7.6 range, which are pretty cheap, all things considered.
Okay. All right. So that would say that China, would they have to intervene for that means they don't have the money to intervene and it would just kind of let go.
Yeah, it just depends. Honestly, it depends on the magnitude of the pressure, right? Like that.
Yeah.
That's the if you give it a little more history on this, we can see a range. I think a lot of folks look at the CNY complex and think that there's like, I mean, I don't know how many people said 7 is the line and 6.5 is the line. Like all of these things are the line. It's not how they manage the currency. They mostly just don't want something like a disorderly acute move. And so the difference between 7.2,
So we've been
7.3
there
and
before.
7.5 is
yeah. We've almost been there. There's what's this? 7 40,
7.3.
37,
Yeah,
37.
Yeah, 737. Yeah, it's 740, something like that. So let's just say there was another round of bearish pressure on the yuan, like them guiding it through 7.5 or 7.6 is not, it's not crazy. There is, of course, the classic speculation that when CNY hits whatever 775, the Hong Kong peg number, they'll unify the
waiting
currencies.
for the peg to break there forever.
Yeah, I think currency unification is the
I see. All right. So that's what's behind the narrative from the FX conspiracy guys.
Yeah, I think, it's not
there, huh? It's a good story.
It's a good story. It's a good story. It's a good story.
So let's talk about the best story in the history of finance. The S&Ps.
The Qs?
Well, yeah, the Qs too. Yeah, the Qs are definitely. Let's go with the Qs. Here's NASDAQ 100. What do you do with new money?
Dale, it only goes up. That's what you have to understand. No.
All right. So what do you do with new money? As a money manager, do you just buy the market?
I mean, I think in this environment, the thing that seems like a more compelling ratio trade is long stocks relative to bonds.
Okay.
Because you can get market action like yesterday, as a simple example. Stocks were close to flat basically, right? And bond yields moved considerably higher. And that is a reflection of strength in the economy when stocks outperform bonds, and a reflection of that strength in the economy. The issue is at some point these yields are going to, the yield rise, particularly at 15 basis points a day, it does create a drag on the equity market. And so that's the thing. That's why I think the better ratio trade is the stocks versus the bonds rather than the stocks. All right. It's been other than that. So
we could maybe have a little correction. We could have how those big round numbers are like magnets. I remember when people were wearing Dow 5000 hats, Bob. That's how old I am.
I don't remember that, but
yeah, that was a big deal. Well, you were in Pampers then. How could you remember?
Probably right.
All right,
probably right.
All right. Anyway, Dale, stop rubbing it into yourself. Anyway,
I remember S&P 500 at 666. That's my
Yeah, the Mark Haynes bottom.
The classic
CNBC. Bottom. Yeah, they gave it to Mark Haynes. So okay. Do you think we could get a pullback if TLT sells off another 4 or 5 handles? We could get a correction.
I think we saw basically how this plays out, which is once you get, I should say, in the summer or whatever, you sort of get the circumstance where once you get rates into the 4 or 5 and above, it starts to have that drag down on the equity market because the concerns on the tightening as a function of it. So my guess is we probably have 30-ish basis point yield moves. So a couple, whatever, what's that? About $5 in TLT, give or take.
All right.
That can move without starting to get the stock market spooked. But as we get a little bit above that, that's when you're going to start to see stocks dragging. Of course, you could have discrete moves like we had yesterday, where stocks don't fulfill their potential basically as a function of the yield rising.
All right. So should I take profits on my long NVIDIA from 200? I'm kidding.
Oh man.
Anyway, I just do see something developing here. It's a 1 millionth divergence, but I'm not kidding. It's been a while since a 4-hour intraday chart is not confirming. So I'll be looking at
Oh,
something
interesting.
like, yeah, something like even the 2 hours. So for a while, it's been the daily. I mean, it's pretty glaring actually on the daily, the divergence at new highs. And the best divergences are when the RSI stays under 70 for a sell. So this was a confirmed high. This was the first divergence, and since then we had that 2 down days, and now we're making new highs with RSI under 70. So just a cautionary note. And the other cautionary note would be VIX closing back over 15 is going to be some type of caution signal, according to me, to what I think. And I want to wrap it.
That VIX chart is interesting because it's
Yeah,
got it's like you can almost feel the buoyancy in the VIX looking at that chart. I mean, you're the technical guy. I've never been so good at it, but
look at how
sometimes I look at markets and have emotional. This looks like a market that wants to rise rather than fall. And that's the feeling I get in the vol space in equities.
Well, S&Ps have made how many consecutive higher highs over the since December, and VIX has made consecutive higher lows. So
that's a very interesting. That's a very interesting observation. Yeah.
Bob, why don't we wrap it with, do you think politics are going to be part of this and play a role in the financial markets as we move through the year?
Well, I think the biggest, I don't think the Fed is going to really change their policy. They're going to look at the macroeconomic data and just respond to it. And that's what they do. Okay. I think the real question is the policy divergences. Fiscal policy, there's let's say spending policy is basically the same between the two, which is, spend a bunch of money. Like, the Republicans want to put money in the hands of rich people and, corporate tax cuts, and the Democrats want to transfer money to poor people. But the effect of which is pretty marginal. Like, there's going to be a lot of treasury issuance.
Don't we need a party that wants to give money to us since we're in the middle? Where's the party?
I know.
That wants to help the middle. Huh?
I hear you. I hear you. I think the real question, the bigger questions are on immigration related policies, where, there's one candidate who says they're going to close the border, which is, going to take 0.5% of labor force growth out of the market on an annual basis, which is a pretty big deal when your natural born labor force growth is essentially zero, and is arguing to deport, 5% of the labor force. That would be a hugely influential inflationary force in our economy if anything close to either of those policies occur. And there's a lot of ability for the president to control those dynamics. So that's really the big policy divergence. One is supportive of new immigration and one is highly against it. And that's the sort of thing which is the difference between whether we keep a lid on wages and inflation, or whether inflationary pressures emerge. And so my guess is that's going to be
next year's story.
That's going to be the story that's setting up the story for next year. And that should also add the tariffs thing is a big deal too. Somewhat for China, but I mean, really for U.S. imported inflation, it's going to be that's a big thing. I mean, Trump is saying 60% tariffs on China. I mean, that would be inflationary.
And that's something, Bob, what a pearl and insight on the immigration issue. Most people think about it from their heart or think about it from their wallet, as far as, paying for illegals or their medical help and everything else. But you think about it in economic sense, that we already have a tight labor market, how much tighter it would become if those policies were instituted. That's really great.
the softening of wages has primarily happened at the lowest income cohorts, and those lowest income cohorts went from the tightest unemployment in forever ever measured to, you know, some meaningful loosening because there were, you know, 2 million, give or take, folks coming into the country. Obviously not all of them are workers, but, you know, we were talking about a relatively substantial flow of workforce loosening up the lower income cohorts. And that's, you know, that's the meaningful impact that that occurs. And you just got to be diagnostic when you're trading markets. You're thinking about the macro economy. You just have to be diagnostic. You know, whatever your personal views are about this policy or that policy. It's not, you know, who the fuck cares? You know, the markets don't care what your personal views are. So you got to put
the power of the market.
That's
like
right.
The ocean.
That's right.
The power of the market. Yeah. What a great interview, Bob. You're looking for people to follow you on X at Bobby Unlimited. Would you like to go to your website? Is there anything, the retail guy, that you're interested in communicating to him on your website?
Yeah. For those of you who want more macroeconomic commentary, as Dale said, Bobby Unlimited on Twitter. I write a lot all the time. And the other thing is I also have a YouTube channel with various clips. If you can't, you know, if this interview wasn't enough, you can get, you know, 2-minute segments of me talking on various platforms. So definitely that's on YouTube at Bobby Unlimited. Same thing.
See it right here. Okay.
So yeah, there you go. Let's check it out.
And you know what, Bob, I want to congratulate you on being a new contributing editor on CNBC. You're a rock. Bob,
I appreciate that.
Yeah, you're a rock star.
You should. I somehow a little dumb luck ended up in that 4 p.m. slot on Fridays, which is very well watched because I was scheduled to do it when SVB failed, and it just so happens I know a lot about the banking system from my old work around the financial crisis. So a little bit of dumb luck and showing up always helps, right?
You know what the dumb luck is for? People that get to hear you, and CNBC for great content that you bring to it. They're the lucky ones, in my extremely accurate and humble opinion, Bob.
I appreciate it.
All right, Bob Elliott, everyone.
Awesome.
All right,
thanks,
great
everybody.
talking to you, Bob. I'll talk to you soon.
Yeah, talk to you later.
All right, buddy. That's a wrap, everyone. You could join the team in 13 minutes on the Morning Edge. I think that Bob and I and the whole team gave you some edges. So keep them sharp. Adios, and don't just count your pips, count your blessings. See everyone tomorrow. Have a great turnaround Tuesday. Thanks again, Bob.
Thanks.